want to talk a little bit about the growth funds versus value funds. So this is a small cap value and this is small cap growth. So you might think it's the same thing because they're small cap companies. But if you look up their profiles, typically what you'll find is a chart here and a description here, what they're invested in, and it's small cap growth. A small cap value would be over here on this side of the chart. Now when I go look up this one here, they don't have a chart on this. Not only do they not have a chart, when you go check the holdings, I don't know what it's actually holding in this account. So I don't know why I'm not able to track that anymore. I used to be able to, but for whatever reason, it's not here in the Fidelity or in the Yahoo accounts anymore. So I can still track this by using another value portfolio, and I use Fidelity. So I've got investments in Fidelity, and what you'll see here is I've got income investments. These would be like bond funds and income funds, and then also this is a gold fund. So those are all put in income, and gold's kind of questionable that it's up there in income, but I put it there as more of a defensive play. If the stock market's going down, people buy gold. I have international funds I invest in, so mostly emerging markets and international small caps. So I'm a believer in the small caps and emerging market funds. So I have those. You have aggressive growth funds. So I have a series of aggressive growth funds with Fidelity, and then I also have value funds. So you got growth versus value. So I have significant funds in my value strategies funds. I also have funds in the leverage cap fund, and then I have energy funds is a value fund in the sense that people look at commodities as something that you're going to buy regardless as to what's going on. You need gas. So if I click on this one, take a look. This is the Fidelity Energy Fund. So you could look up any energy fund. We have an energy fund in our 401k we could choose. But they're basically all going to mimic each other, because when you go select holdings, they almost always have the same holdings here. So it's just same oil companies. Okay, so most of their funds is going to be invested in energy for this one. And if I go to the profile, you see it's got value, and these are large cap companies. So you probably heard of them. If I go back to the holdings, you got companies and energy funds such as Exxon, Chevron, Valerio, Conoco. You've probably heard of these or even bought gas from these. Well, if you're buying gas, why not have money invested in this? And then when the price of gas goes up, you make more money. Ideally, if you have money invested in this, you'll make more money than the price of gas is going up. So, but I'm not going to go into energy funds. I'm just trying to talk about growth versus value. Let's close that off for a sec. So, again, going back to this small cap value portfolio, it's hard for me to find anything on this. But I could go to my Fidelity portfolio here and take a look at my value fund here. If I click on this, this is the Fidelity Value Strategic Funds. And if I go to portfolio, come on computer, it's got value, medium, small, large. So the Morningstar kind of tells you what sectors you're buying into. You have small cap companies. I think $250 million of assets makes up a small cap company. If you're not up to $250 million, you're not even considered a small company. I don't know what the new numbers are, but you got to be in the billions to be up here in the large cap company. So we have value, growth, and then a blend if they have a combination of value and growth. All right, so if I look at the holdings, I'm pretty much going to get the same kind of holdings. It's going to be spread out here. and these are the companies that's considering value funds. So just to kind of sum it up, in general, a value fund is something typically that price versus earnings, the price is low, or at least a lot lower than typically a growth fund. So it's considered a value investment because the price you're paying would be versus how much the company's earning is a much better price than the growth companies. The growth companies, it's just kind of funny. It's a lot of them are doing terrible. Like take Tesla, the amount of money they're actually earning and the value of their portfolio or stock went way up high. The price was a growth fund because it was growing aggressively. Yet the value for what you're getting is not a good value. But it's like your popular restaurant. Even though it's not a good value, it's going up because of the high demand. People are buying into it. So if you look at your portfolio and you have a value fund versus growth fund, that's kind of the difference. If you go into growth funds, you're going to see more tech heavyweight. If I go check out the holdings for this growth fund, you see that a fourth of this money is in tech. And also they got 20% in healthcare, which is kind of almost a value fund, depending on what healthcare they have. Now, they might have more biotech, which would be more aggressive. But like if you think of Johnson and Johnson, nobody gets excited about buying Band-Aids, but everybody knows you're going to buy Band-Aids, toilet paper, those kinds of things. Those are value type companies. Johnson & Johnson's a huge company. It makes money, but not a lot of people get excited about buying into it. So therefore, a lot of times it's considered a value fund because the price isn't that high versus how much money they're actually earning. So again, just to kind of help you look at it, I don't get too caught up on what companies they are. I rotate money around. If I see my growth is up and my value is down, I might take some money out of growth and put it in the value fund or vice versa. All right, I hope that helps you get a little concept there of value versus growth funds. You could probably just Google that. I'll give you another idea here for what I consider my aggressive value fund. So let's take a look at this one here. Which one is that? So this is the industrial funds. Actually, I already pulled that up. All right, so what are they going to be into? Well, companies that have they're building industrial things, maybe like Caterpillar or Boeing, or see they have 86% of it in industrial. And then these are the companies, aerospace companies. They got a technology company. So those are industrial type. You'd see like, Caterpillar or Boeing or something like that. You have Raytheon in here. So those are industrials versus, I forgot to pull up that. This is utilities funds, and this is the real estate. So, I diversify and have money in different accounts here. If I look at the chart for this, not chart, sorry, portfolio. This is going to be a blend. So when I see blend, I consider that to be pretty much a value fund. And now I've got medium-sized companies in this one versus the portfolio on the value fund. That's value, medium companies, utilities. Let's take a look at the profile here. That's large cap funds and value. So that would be like, who are you paying your utility bills to? All these are energy type companies. So I think utilities is a good play. I always keep some money in utilities because everybody's using power these days, right? If you're having an electric bill or gas bill, you're paying into utilities. So if you're tired of paying utility bills, maybe invest in utilities and make money on your utilities and get your utilities paid for by investing in it. Did I already do industrial? Yeah, which other one did I do? Oh, and then this was real estate. I thought I clicked on that one already. So you have real estate. What is that going to hold? Well, it's probably going to hold mostly commercial type companies, bigger industrial type companies, or strip malls and stuff like that. And they probably have real estate companies in there as well. But right now, I think real estate might be a little risky in there. Not that I don't have funds in there, but that's not one of my stronger buys right now. If you look at the profile, again, this could be a mix of value and growth funds. Okay. All right, that's something to think about when you're investing into value versus growth funds.